Gold could be on the verge of a breakout. This could be a violent move. It could move in a violent way, actually, I said. And people will be shocked in 1 to 10 years, in 1 to 2 years. Well, we're there now. Gold was trading then around 2,000. We're at 2,600. We could see 3,000 before the end of the year. So this is an important move. I think it's the start of a whole new bull market. I think the precious metals bull market will continue. And silver is looking very explosive. Silver often has a delay when a new bull market starts. And when silver crosses $31, $32, we're very close. Don't be surprised to see a very quick run towards $40. And we are overweight silver positions.
The precious metals market is witnessing a remarkable surge, with gold and silver at the forefront of what experts believe could be an extraordinary bull run. Willem Middelkoop, a renowned Dutch investor and author, set the stage for a potentially explosive period in the sector. Gold, the stalwart of safe haven assets, has been on an impressive trajectory. Initially hovering around $2,000, it has climbed steadily to approximately $2,600, with Middelkoop boldly projecting a year-end target of $3,000. This optimistic outlook isn't isolated. Analysts at Intesa Sanpaolo echo similar sentiments, foreseeing gold potentially reaching the $3,000 per ounce milestone in the coming months. The yellow metal has already etched its name in the record books, approaching an unprecedented $2,700. This stellar performance, marking a surge of over 29% in 2024 alone, can be attributed to a confluence of factors. Speculation surrounding Federal Reserve rate cuts, persistent geopolitical tensions, and heightened buying activity from central banks have all contributed to gold's remarkable ascent. However, the narrative extends beyond gold. Middelkoop believes that while silver typically lags at the onset of a bull market, it's poised for explosive growth. According to Middelkoop, once silver breaches the $31 to $32 range, a rapid ascent to $40 is highly probable. This bullish sentiment for silver is not confined to Middelkoop's analysis. The broader market echoes this optimism, with analysts revising their forecasts upward. Notably, Kondoshko of Mine Money projects silver prices could reach between $40 and $50 by mid-2025, underscoring the potential for significant gains in the silver market. Before we dive into this video, please subscribe to our channel and hit the bell icon so you never miss an update. Please share this with anyone who might benefit from it, and don't forget to like the video.
Gold could be on the verge of a breakout. This could be a violent move. It could move in a violent way, actually, I said. And people will be shocked in 1 to 10 years, in 1 to 2 years. Well, we're there now. Gold was trading then around 2,000. We're at 2,600. I think we could see 3,000 before the end of the year. So this is an important move. And I think it's the start of a whole new bull market. If you look at the margins of the producers, they're really starting to move higher now. On average, the margins for a producer is $850 per ounce now. And every dollar the gold price moves up, the margin increases because the cost of energy, the cost of oil is coming down as well. So the producers really benefit. And I think if general investors will see the Q3 and Q4 numbers coming out in a few months, they will see that this sector is really undervalued still. We've seen again some disasters with single asset producers. Victoria Gold comes to mind. Investors like ourselves don't like to invest in single assets producers. So we prefer to buy the ETF. You buy a basket of producers. And if you're in a bear market, the whole basket will grow in value. So I think these single asset producers, they feel the need to merge with other companies to grow their asset base. And of course, there's some broader market risk with the broader markets, Nasdaq, Standard & Poor's, Dow Jones seem to be topping. Of course, we have elections ongoing. We have the large geopolitical tensions. So we, in our fund, are getting a bit more defensive because there are some tail risks. But all the risks explained might bring more money to the precious metals. So I think the precious metals bull market will continue. And silver is looking very explosive. Silver often has a delay when a new bull market starts. And when silver crosses $31, $32, we're very close. Don't be surprised to see a very quick run towards $40. And we are overweight silver positions. We have very high hopes. We had two of our largest positions. One was Greatland Gold. They did a wonderful deal with Newman, buying the Telfer mine. I just explained that. The other one is Hercules Silver. It's renamed Hercules Metals. They've proven that there is copper to be found in Idaho. They found a porphyry deposit, probably a copper porphyry district, and the majors are all over this. Barrick came in within a month and took a 50% stake. They're drilling now. They had some problems starting up the drilling. So we expect they will be able to prove within the next 12 to 24 months that there is a new copper district in Idaho, and then the valuations could go up massively and they could be taken out by Barrick maybe sooner than people expect.
Middelkoop's observed pattern of market recoveries after major economic shocks is consistent with the findings from both the 2016 commodity market bottom and the 2020 COVID-19 crash. In the 2016 downturn, the sequential bottoming of different sectors aligns with Middelkoop's concept of a recurring recovery pattern. This sequential recovery in 2016 parallels the sector-specific performance observed during the COVID-19 crash in 2020. Just as specific commodity sectors led the recovery in 2016, the study of the COVID-19 market crash revealed that specific sectors like natural gas, food, healthcare, and software experienced significant positive returns. This sector-based outperformance during the pandemic-induced downturn echoes the pattern Middelkoop has identified across multiple economic shocks. The driving factors behind these recoveries also show similarities. In 2016, the rebalancing of supply and demand and resilient demand in a low-price environment contributed to the sector-specific recoveries. Similarly, the sectors that performed well during the COVID-19 crash likely benefited from shifting demand patterns and economic conditions unique to the pandemic. Let's get back to the interview.
We still see a lack of new discoveries. We focus on tier 1, tier 2 discoveries worldwide. We've seen a few, especially coming from Australia in the last few years. We had Hemi deposit discovery by De Grey, Greatland gold discovery, the Havion project, but we lack serious new discoveries. So I see too much of a rehash of old projects being renamed, being owned by a new company. And of course, the M&A, the wave of M&A is something which is quite new and understandable, because the management teams of the producing companies, they understand the cycles quite well. And they know if they will wait in doing some acquisitions, they will have to pay more. So there's a very strong competitive tension out there to buy other companies and to grow, not through discoveries, but by acquiring competitors or peers. There's a lot of capital available for good companies and good projects. I mentioned Greatland Gold. They just took over the Telfer mine from Newman. They did a financing in 24 hours of over 300 million. So this is a junior company, almost a developer, doing a 300 million financing. So there's enough money available for good projects. But I agree, there are too many exploration companies which don't have great assets, and those will keep suffering for quite some time. And there might be relief when we see a full-blown bull market or even a hype within resource stocks, but that's, I think, a few years out. And when you're in a bull market and looking for bargains, you won't find any. I'm afraid Barrick will be stuck for a while. They say they want to do an acquisition, preferably in the North Americas. They are involved in some new discoveries, like with Hercules Metals, but that will take time. And of course, there's quite a bit of risk involved in their huge project they need to start up now in Pakistan. We have been doing this for 15 years, so we have some experience. After the Lehman crash, we saw the major producers recover first and then the smaller companies. We saw the same happening in 2016 at the bottom of the commodity markets. We saw the same happening after the COVID crash in 2020. So we expect the juniors really to rise in the next few quarters. We're all around flat for the year now. Producers are up around 20-30%, but many of the juniors are still down 20-30-40% for the year. So, on the positive side, we still see some good inflows of money. Net inflow of money this year is 10 million for our fund, and we're a 100 million euro fund.
The prospects for gold and silver are optimistic, driven by substantial capital inflows and favorable market trends. Gold is anticipated to reach $3,000 by year-end, while silver may experience explosive growth as it approaches the $31 to $32 range. Despite the challenges many junior companies face, the market sentiment remains bullish, suggesting that gold and silver will likely attract investment and recover from recent downturns. Before we go, what are your thoughts on gold and silver prices? If you found this video insightful, please give it a thumbs up and share it with anyone who might benefit from this information. Don't forget to subscribe. Thank you for joining us today. See you in the following video.